Are we still in a recession? This is the myth that Alex Mashinsky, CEO of Celsius Network, is here to bust today and explain what reality really is right now. Alex, welcome back to the show. We have a lot to go over. We're speaking on the 4th of November, so a day after the elections began. I say began because we still haven't had the definitive results yet, as you know. Let's talk about that. But before then, let's talk about the economy. Before we had the election, you were telling me offline, even before the election and all this political haywire, the economy was not in a good place, right? We had a recession. Are we still in a recession?
Yeah, thanks, David, and thanks for having me back. The economy went through a two-punch, basically, event, right? One was, again, September of last year, when the repo market froze and the Fed had to inject several $100 billion. And then you had the COVID second punch, which we are just now experiencing the second wave of, right? So these are mega events, global events that are trickling or making their way through the entire world economy. So even though the central banks have done everything they could to counter that with trillions of dollars worth of liquidity, what we're going through is like this slow motion wreck, meaning we are just at the beginning of a really deep recession. So even though the stock market rebounded, what's happening in the day-to-day, in the real life of every person is actually much worse than what you're seeing reflected in the prices of stocks or bonds or the gold market.
All right, so let's talk about specific asset classes that you like now, and then we can elaborate on the economy. Now, you and I have spoken several times before. The first time we spoke was May 19th this year. I just pulled that up. So at that time, Bitcoin was around $9,700, and the headline of that particular article, remember, was 5% of your portfolio should have been in Bitcoin. Now, if you had done that, you would have been $5,000 richer per Bitcoin. So, you had anticipated $20,000 Bitcoin target at the end of the year. Do you still hold on to that target?
Yes, I think we will hit new highs. Again, there's very few assets that hold their value and generate yield. So Bitcoin is an exceptional source of such appreciation. Again, up, like you said, over 50%. To date, and I think it will continue to do exceptionally well. And if you use service like Celsius Network, you can actually earn an additional 6.2% annualized yield in kind on that asset. So you can actually achieve very high returns compared to any other asset class.
Okay, we're going to talk about that in just a second as well. But do you think Bitcoin's rise has anything to do with the economy?
Yeah, so look, I mean, when you see people like Paul Tudor Jones, PayPal, MicroStrategy, and many, many others like Line, who we partner with, come in and basically deploy hundreds of millions of dollars, if not billions of dollars, into this asset class. Grayscale reporting record signups, right? $7 billion worth of AUM. We have over 2 billion in AUM now. So when all these things kind of take effect, you're seeing limited supply, because Bitcoin still have limited supply. They're not making more of it. There is no Fed that can print more Bitcoin. And new set of users that are joining who are buying, right? More buyers, less sellers. So that drives the price up, and that adaption is what forcing the prices to go to all-time highs. So that is we're just in the beginning of that process, because MicroStrategy is a great example. They took their treasury, $500 million, and bought Bitcoin with it, right? Because they don't believe that putting that into bonds or stocks or the bank will yield them anything else. This year, the Fed printed 20% of all the dollars that ever existed just this year. So the dollar had a 20% inflation, even though the government tells you that CPI is less than 2%.
Okay. I mean, do you think we're still in a recession now? Let's just break this down, because the definition of a recession, if I recall, is 2 consecutive quarters of contracting GDP. We had that, and then third quarter GDP was a positive 33% on an annualized basis, right? So you could argue that we're technically, per definition, out of a recession, but I'm looking around, we still have record levels of unemployment. It's improving a little bit, but consumer spending is low, and all these other problems you just mentioned. I'm confused, Alex.
Look, the sign behind you, Kitco sign, is exactly the letter I need, the K
Yeah.
for the K economy that we're experiencing. So if you took the numbers that are being reported to you, and you broke them into the digital economy and the non-digital economy, you would see that the upper part of the K is Amazon and Apple and Zoom and all the other services that are digital. And those companies are not experiencing a recession. But almost every other business that is digital, there's not digital, is the bottom part of the K, and it does have 2 or 3 quarters of decreasing revenues, decreasing basically income, which definitely represents a recession.
Well, Amazon, Zoom, and the other FANG stocks, the tech stocks. Some people have told me that they're the ones driving up the stock market. It's just those big names. So could you then make the argument that the stock market is reflecting economic reality because, like you said, those companies are doing well, but the stock market is only being driven up because of valuations of those companies, right?
That's right. The upper part of the K, the part that's going up, is all digital stocks that are benefiting from the shock to the economy. Because as we had to stay at home, as we kind of changed our behavior, we consume more of the digital services and we consume less of the physical services. So if you're in those stocks, and I think you've seen today and yesterday the stock market effectively a lot of money flowing into those assets and away from the more traditional economy that is still being supported by the Fed, right? The Fed still has that safety net under Boeing and under the airlines and under all the people who borrowed money from the government. But those businesses are just not going to do as well as the digital services. So I think we are seeing that bifurcation of the economy, and we have a recession in I would say, 60-70% of the economy, and the rest of the economy is doing exceptionally well.
Yeah. So would you still stay invested in that upper part of the K?
There's still a lot of money chasing these assets. There's definitely going to be, no matter who wins the election in the next few days, there's going to be another stimulus, and a lot of that stimulus is going to find its way to the stock market. So yes, the FANGs and some of the other digital stocks are going to new highs as well, because there's just, again, too much supply of money and not enough stocks to take that supply, which means higher prices.
Let's talk about investments now. I know you like Bitcoin. I know you like gold. And I know your thesis for the economy now. What else am I missing in terms of assets you like?
Look, I only really like gold and Bitcoin.
All right, so I'm not missing anything.
I think the other assets are fully priced, even though there's some upside in Apple and Netflix and Facebook and so on. There's also a lot of risk there, right? So I think as people kind of start to tap into their savings, they're going to have to sell some of these assets. So there's going to be also selling pressure. We just don't know if it's going to start in December or in March. So I much rather look at assets that really have limited supply, like Bitcoin and gold. And I think Bitcoin is even more limited in its supply, and it has much more organic demand from institutions that own nothing, own zero, right, in these assets, versus most people already have an allocation to gold. And the entire asset class in Bitcoin is $400 billion compared to almost 10 trillion in gold. So the upside, right, the ability to generate 10x returns or even 50x returns in Bitcoin are obviously dramatically higher than any of these other asset classes. So your allocation to it should only be, again, 5, 10, 15%, depending on your risk levels. But the ability to generate those, amazing returns is going to come from that part of the portfolio. It's not going to come from Google increasing 10 times in value or Apple increasing 5 times in value.
I spoke to an analyst, a Bitcoin analyst, and he said that we're about to see $100,000 Bitcoin by 2025. So that's 5 years out. Does that seem reasonable to you?
Yeah, look, so Bitcoin is a binary event. It's either goes to 100,000 or more, or it effectively loses value because the adoption goes away. And the only reason it could go away is because other either governments or institutions come up with something better than Bitcoin. In the last 12 years, Bitcoin just had its birthday, the 12th birthday. And in 12 years, we have not created anything better than Bitcoin or even close to Bitcoin. Bitcoin is up over 9 million% in 12 years, right? So by far the best performing asset. The closest competitor to Bitcoin is Netflix with just over 4,000% return. So because of that, again, the risk reward here is tremendous, right, for the upside. But you do have to watch the central bank digital currencies. You have to watch some of the corporate initiatives like Libra and others, and make sure that the adoption of Bitcoin is running ahead of any of these other alternatives.
Yeah, so let's talk about Celsius Network now. How is it that some of these crypto savings can rack up 10% interests, right? That's 100% times more than what you get at the bank for fiat. How's that possible?
Yeah, so a lot of people ask me that question every time. And it's not that Celsius Network is so great, it's the banks are so bad, right? So if you look at any bank and you look at their financial statements, you will see that they're actually generating higher return than Celsius, meaning their return on capital. For example, JP Morgan, I think last quarter did something like 17.5% return on capital. So they could, in theory, pay their depositors 5, 6, 7%, even 10% like Celsius and still be profitable. The problem is that they don't have to, right? They're getting billions of dollars, hundreds of billions of dollars in deposits and only paying 0.1% because the 4 largest banks in the United States pay exactly the same rate. In Europe, it's a negative rate. So what Celsius has done is basically turn that whole thing on its head and decided to pay depositors 80% of our income. So anything we generate, we distribute 80% of that, very similar to what REITs do, right? It's just that the cost of money, the cost of capital in the crypto markets is dramatically higher than it is on Wall Street. And because of that, we can extract much higher tolls or charge our institutions much higher interest rates than JP Morgan, for example, can charge its customers. And because of that, the rate is high. Obviously, if we had inflows of tens of billions of dollars, the rate would come down and it will be probably low single digits. But right now, we're enjoying this unique situation where there's a scarcity of dollars in the crypto market. And because of that, we are now managing over 2 billion and we can charge these really, really high rates, which we deliver to the community. So right now, stablecoins are earning 10%, Bitcoin is earning 6.2%, Ethereum is earning 5.75%, and so on.
Okay. Finally, let's talk about sort of the future right now, because not many people might know this, but you're one of the early developers of voice over IP technology. And so, you're somewhat of a futurist. You're an innovator. You're a scientist. And so, I want to get your thoughts on where technology is headed over the next 2-3 decades. With thinking long term, what is with the rise of AI? Some scientists are predicting singularity, which is cool and scary at the same time. Elon Musk wants to go to Mars. Right? There's the rise of automation, which is going to put millions of people out of work around the world. So we're seeing this huge sort of technological revolution right now. How is society going to change in the next 2-3 decades? What should investors be positioned for?
Yeah, so there's no question that these new technologies, machine learning, artificial intelligence, digital currencies, are transformational industries and transformational technologies. It's not like a little incremental improvement, right? And all you have to do is watch a 10 or 20-year-old movie and see how fast we've advanced, right? Because only when you look backwards, you realize, oh my God, my phone is a supercomputer. Look at what people used just 10 years ago, right? So just project yourself 10 years into the future and think how much what kind of capabilities we're going to have. So there's definitely the knowledge in the cloud, of what we call artificial intelligence, is going to surpass human knowledge, and we'll be able to hopefully be our assistant instead of our competitor. But we're definitely reaching a point where there's going to be tremendous amount of automation. We're going to need to find a different use for people, right? People are not going to have to do 60, 70% of the daily jobs that we do today, because all of that is going to be automated. So the whole purpose of what we call work, I think, is going to change dramatically. And most of us, hopefully, will have an opportunity to do what we love to do instead of the chores that we have to do at work every day. So we're just at the beginning of exploring that, and I see it as a good thing, not as a bad thing.
What is the risk of all of us being replaced by machines? I'm sure if you or somebody else that could design a robot with sufficient enough AI, he could ask better questions than me, right? I could be, a robot could be talking to you. So
you may be a robot, and I wouldn't know.
Maybe,
right?
Yeah, yeah. Well, Elon Musk thinks the entire world is a simulation, right? So we could
be
robots.
That's right. So there's definitely we're just starting to understand all the stuff you just talked about. Again, we're still experimenting in all these fields, and there's definitely still a lot to explore and innovate. And the question is, are we going to use it for good, or are we going to use it for bad things, right? So if you just focus on profit generation and you're automating everything and you're going to put many, many people out of work, then obviously that's not a good implementation of the technology. But if you are using all this technology to evolve humanity and use it to basically find new ways for all of us to express ourselves and be useful, because I think most of us find happiness when we find that we use ourselves to the limit, right? And so I see artificial intelligence, machine learning hopefully enabling us to be the best we can be. And that's what I'm working on with digital currencies and all the other things at Celsius Network.
Okay, well, besides artificial intelligence, is there a technological trend you're really looking forward to? Is there something that you're following closely?
Well, so digital money, the reason cryptocurrencies and digital money is so important, or what I call money over IP, just like voice over IP brought freedom, we're communicating right now for free, right, over voice over the internet. Money over IP is the first time that basically everything could be digital. And it's not just people can transact with people, but machines can transact with machines. So part of the automation that we need to achieve with machine learning and artificial intelligence, the third leg of the stool, is transforming money into a digital form that could be trusted by machines through an open ledger, through public blockchains. And that is a critical piece of enabling this entire ecosystem to live and transact in the ways that we hope to achieve, right? So today, a lot of people view Bitcoin as just something you can make money on, but really it's a fundamental and critical piece of this new technology or new evolution that we're going into, where, again, the cloud or the global internet is doing most of our daily chores.
Perfect. All right. Well, that was a lot to digest. Thank you very much. We got through a lot of topics. I enjoyed that talk. Thanks very much, Alex.
Thanks, David, for having me.
All right. We'll speak again soon. I'm David Lin for Kitco News. Stay tuned.